Have you ever wondered how to turn $1,000 into $1 million? Let's face it, we've all dreamed about achieving life-changing wealth through smart investments. However, as global markets experience a rebound, driven by cooling U.S. inflation and strong bank earnings, major indices like the S&P 500 and Dow Jones Industrial Average have seen significant gains, while value stocks outperformed growth shares. In this dynamic environment, identifying high-growth tech stocks requires a focus on companies that demonstrate resilience and adaptability to evolving economic conditions, as these traits can position them well for future opportunities in an ever-changing market landscape. This video covers three of the best-valued, fastest-growing, and most momentum companies within the technology and artificial intelligence (AI) sector. These companies exhibit significant growth potential and provide opportunities to capitalize on the industry's rapid advancement and innovation. We also excluded stocks with a price under $5, an average daily trading volume of less than 100,000, and a market cap of less than $300 million. Technology stocks offer investors the promise of growth in ways few other sectors can. After all, tech is synonymous with innovation that spawns new products, services, and features. According to our fair value estimates as of January 22, 2025, the stocks of these technology companies, whether wide or narrow, are the most undervalued. Especially for the second and last pick on the list, you quickly skip to check them before returning to the start. If you're okay with all being said and ready to jump in, please hit that like button and subscribe if you're new here for smart investing and financial growth strategies. The first pick on the list is On Semiconductor Corporation, ticker ON. On Semiconductor is trading at a 35% discount to our fair value estimate of $86 per share. The company is the second largest power chip maker in the world and the largest supplier of image sensors to the automotive market. It earns a narrow economic moat rating. It is a prominent global player in the semiconductor sector, offering solutions across various areas, including power and signal management, sensors, logic, and discrete and custom devices. The company serves the automotive, communications, computing, consumer electronics, and medical industries, positioning itself at the forefront of innovation. We expect On Semiconductor to outpace the growth of its underlying markets over the next 5 years as it tailors its portfolio of chips and sensors to pursue secular trends toward electrification and connectivity that allow it to sell into new sockets. Specifically, On Semiconductor is the top supplier of image sensors for automotive applications like Advanced Driver Assist Systems, or ADAS, and its semiconductors enable power management and conversion in electric vehicles, or EVs, and renewable energy, all of which we expect to keep On Semiconductor sales growth above that of the broader semiconductor industry. Regarding financial performance, On Semiconductor has shown resilience and strong growth despite a challenging environment. Recent figures highlight that the company's stock price, while experiencing fluctuations, holds substantial upside potential. With a price target of around $83.35, there is significant room for growth from its current levels. ON has a market cap or net worth of $23.68 billion and an enterprise value of $24.55 billion. The stock price has decreased by -24.72% in the last 52 weeks. The beta is 1.64, so ON's price volatility has been higher than the market average. On Semiconductor's revenue was $1.76 billion in the September 27, 2024 quarter, a decrease of -19.21%. This brings the company's revenue in the last 12 months to $7.38 billion, down 11.52% year-over-year. In 2023, On Semiconductor had an annual revenue of $8.25 billion, down 0.88%. With 12-month price forecasts for On Semiconductor stock has an average target of 82.52, with a low estimate of 55 and a high estimate of 104. The average target predicts an increase of 48.39% from the current stock price of 55.61. We expect On Semiconductor to focus on expanding margins over the medium term. Management has invested heavily in pruning and improving its manufacturing efficiency, and we expect it to see the impact soon. The firm will continue to focus its investments on the automotive and industrial markets, with higher growth and margins than its legacy consumer and smartphone markets. We think management faces execution risk in hitting its lofty goal of 53% non-GAAP gross margin, but expect both a focus on higher margin verticals and an improved manufacturing footprint to get it to the low 50% range over the next 5 years, from a previous mid-cycle margin below 38%. Does ON Semiconductor stock reflect the potential of becoming the next big thing? Could you drop your comment below? Trust me, the following stock on the list presents a good opportunity, while the third is my best pick. But before we continue, watching this video until this moment proves you're interested in upscaling your finance and investment opportunities. Then hit the like button, share, and subscribe if you're new here for smart investing and financial growth strategies. That takes us to the second technology stock with a high potential growth rate, Clinuvel Pharmaceuticals Limited, ticker CUV. A biopharmaceutical company focuses on developing and commercializing treatments for patients with genetic, metabolic, systemic, and life-threatening disorders in Australia, Europe, the United States, Switzerland, and internationally. It is also developing NEURACTHEL, ACTH. This adrenocorticotropic hormone produces cortisol and enables the combat of stress, regulation of immune responses, maintenance of blood pressure, moderation of blood sugar, and regulation of metabolism. The company was incorporated in 1999 and is headquartered in Melbourne, Australia. This company isn't a random pick, but a strategic stock that made it into our list with proven data. Here are the key reasons. Trading at 87.2% below our estimate of its fair value. Earnings are forecast to grow 26.17% per year. Earnings grew by 16.4% over the past year. Trading at good value compared to peers and industry. Stable share price. Compared to the Australian market, CUV has not experienced significant price volatility in the past 3 months. Volatility over time. CUV's weekly volatility, 4%, has been stable over the past year. Let's closely examine their fundamentals to see if it's worthwhile. Earnings 35.64 M Australian dollar. Revenue 88.18 M Australian dollar. The market cap is 595.87 million Australian dollars. Now, the earnings and revenue as of last reported, June 30th, 2024, the earnings per share, EPS, is 0.71. Gross margin 91.23%. Net profit margin 40.41%. Debt, equity ratio 0%. P/E ratio 16.7x. Key metric. As CUV is profitable, we use its price-to-earnings ratio for relative valuation analysis. Is CUV undervalued compared to its fair value, analyst forecasts, and price relative to the market? First, share price versus fair value. What is CUV's fair price when considering its future cash flows? We use a discounted cash flow model for this estimate. Below fair value, CUV, 11 Australian dollars and 93 cents, is trading below our estimate of fair value, 93 Australian dollars and 12 cents. Significantly below fair value. CUV trades below fair value by more than 20%. Price to earnings versus peers. CUV is good value based on its price to earnings ratio, 16.7x, compared to the peer average, 63.6x. Price to earnings versus industry. CUV is good value based on its price to earnings ratio, 16.7x, compared to the global biotech industry average, 26x. What is CUV's P/E ratio compared to its fair P/E ratio? This is the expected P/E ratio considering the company's forecast earnings growth, profit margins, and other risk factors. Price to earnings versus fair ratio. CUV is good value based on its price to earnings ratio, 16.7x, compared to the estimated fair price to earnings ratio, 20.5x. Future growth. Clinuvel Pharmaceuticals has been growing earnings at an average annual rate of 15.8%, while the biotech industry saw earnings grow at 13.5% annually. Revenues have been growing at an average rate of 22.9% per year. Clinuvel Pharmaceuticals is forecast to grow earnings and revenue by 26.2% and 21.4% per annum, respectively. EPS is expected to grow by 25.8% per annum. Return on equity is forecast to be 20.1% in 3 years. Quality earnings. CUV has a high level of non-cash earnings. Growing profit margin. CUV's current net profit margins, 40.4%, are higher than last year, 39.1%. The company's financial health is just right. Clinuvel Pharmaceuticals has a total shareholder equity of 203.0 million Australian dollars and a total debt of 0 Australian dollars, which brings its debt-to-equity ratio to 0%. Its total assets and liabilities are 231.1 million Australian dollars and 28.1 million Australian dollars, respectively. Clinuvel Pharmaceuticals' EBIT is 48.6 million Australian dollars, making its interest coverage ratio -16.9. It has cash and short-term investments of 183.9 million Australian dollars. After all that and a close look, do you think this stock has the potential for growth and profitability? Comment below. Here's the kicker. First, help me tap the like button, subscribe, and share to help this channel grow. This will enable those looking for a similar opportunity to gain. 2. Moving on to the next pick on the list, ST Microelectronics NV ticker STM. ST Microelectronics designs, develops, manufactures, and markets semiconductor products for various applications, including automotive, consumer electronics, industrial, and communications sectors. The company is a key supplier of microcontrollers, power management chips, sensors, and embedded processing solutions, making it a leader in industries that are increasingly reliant on technological innovations such as IoT, automotive electronics, and AI. STM's recent developments in edge AI, power efficiency, and quantum computing collaboration highlight its strategic focus on high-growth sectors. ST Microelectronics is a key player in the semiconductor industry, benefiting from diverse sectors such as automotive, consumer electronics, and industrial applications. The company has been focusing on high-growth markets like automotive power chips and energy-efficient solutions, which are expected to drive future growth. Additionally, collaborations with other tech leaders like Qualcomm and Ampere suggest STM's commitment to advancing in areas like AI and quantum computing. The company has also made notable moves into edge AI, offering microcontrollers with neural processing capabilities, positioning itself at the forefront of the AI revolution. Let's check out key financials. STM has a market cap or net worth of $23.04 billion and an enterprise value of $20.52 billion. The stock price has decreased by -42.77% in the last 52 weeks. The beta is 1.24, so STM's price volatility has been higher than the market average. The stock price has decreased by -42.77% in the last 52 weeks. The beta is 1.24, so STM's price volatility has been higher than the market average. Here is my STM stock price forecast. The analyst with 12-month price forecasts for ST Microelectronics stock has an average target of 37.63, with a low estimate of 30 and a high estimate of 45.8. The average target predicts an increase of 46.14% from the current stock price 25.75. After looking deeply into these three high-potential technology stocks, do you think the opportunities are worth turning $1,000 into $1 million? Let us know in the comments section. However, for long-term investors, this might represent an opportunity to buy on the dip, anticipating a market rebound in the coming years. Do well to like, subscribe, and turn the bell notification for more analysis. See you in the following video.